watching the correlation between freight rates and PCE goods inflation, so the goods inflation component of the PCE price index that the Fed measures, we should expect inflation in goods to be gone by May this year. That is a dramatic change of scenery compared to 2022, when goods inflation was very elevated. We are basically standing at a crossroads right now when it comes to inflation, because we have one trend in goods inflation and another trend in inflation of services. And the reason is that we are clearly at the point in time where the economic cycle is slowing visibly in the US. It's the same elsewhere across the globe, but clearly also in the US by now. And if we look at the inflation dynamics as a consequence of this slowing growth cycle, it is now clear that goods inflation is no longer the most important part of the inflation that we see and face in the US. Goods are now almost dropping in price. They at least do that on a monthly basis, not on a yearly basis yet, but that will probably come during the year. But on the other hand, service inflation is still running hot. And we should remember that the service inflation is what's driven by you and I, the labor market, so the physical economy, right? And as long as that part of the equation is still running hot, it's not necessarily something that the Fed will take comfort in, this mixture of slowing inflation in goods, but still rapidly rising inflation in services. But if we look a bit ahead, what's the key component to watch here? My main take is that goods inflation will be on everybody's lips throughout the first quarter of the year. And the reason is that we know that goods prices are important in the consumer basket right now relative to earlier, as a consequence of the updated consumer weights that we saw throughout the pandemic. So throughout the pandemic, the average household basically spent more on goods, and that is now reflected in the importance of goods in the inflation calculation. And we will get updated weights to this inflation basket throughout this year. But if we look at the weightings right now, goods are important for the equation. And if we take a look at what's going on beneath the surface with the price action in physical goods, I'd like to start with a very concrete chart on the price of food. We know that food prices have been elevated throughout 2022, and it is, of course, one of the main necessities of the consumer basket. So it is important also for the Federal Reserve outlook. And if we look at food inflation right now, it is clear from actual traded food prices on exchanges, as measured by the UN price index, that we've seen a slowdown clearly in food prices over the course of the fourth quarter of 2022 and into the early parts of 2023. And typically it takes in between 3 and 4 months for the consumer price index in the US to fully capture such a move. So I would expect food prices to clearly decline on a monthly and quarterly basis throughout the first quarter of the year. And food prices are important for the consumer basket. If we pair that with the overall outlook for the price of goods, then I'd like to point your attention to what's going on with freight rates. We've almost grown accustomed by now to extreme freight rates from China to the West as a consequence of the zero COVID policy in China. But standing here in the early parts of 2023, we now know that China is slowly but surely reopening. And that is something that is already reflected in freight rates as a consequence of easing supply chains, but also as a consequence of weakening demand from households in the US and in Europe. If we look at the price move in freight rates, we've gone from an index of above 5,000 to now just above 1,000 in the average freight rate from Shanghai to LA or Rotterdam in Holland. And that is an important change to the price momentum for the price of goods overall, because the price of a good in Walmart or any other retailer is obviously a function of the price of transportation, since it's usually not manufactured locally. And when a freight rate is falling to the extent that it is right now, it will eventually show up as a decline at the consumer level, at the store level, in the US as well, with the time lag. And that is essentially what I think is on the cards for the first half of this year. Very rapid deceleration in the price action of goods due to a substantial price drop in the price of transportation, which is a clear game changer to the outlook for goods inflation. So watching the correlation between freight rates and PCE goods inflation, so the goods inflation component of the PCE price index that the Fed measures, we should expect inflation in goods to be gone by May this year. That is a dramatic change of scenery compared to 2022, when goods inflation was very elevated.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.